India's economic growth has slowed to its worst in nearly a decade, hurt by domestic constraints such as high inflation, wide fiscal and current account deficits and steep borrowing costs. Joining me to discuss this further is Jayati Ghosh, Professor of Economics at Jawaharial Nehru University. Hello Jayati. Indian economic growth may rebound in 2013 while falling short of the government's 8% target, and high inflation limits the extent interest rates can be lowered. What are your thoughts on this?
Well, first of all, I think it's wrong to be obsessed with purely a growth target. We've had 20 years of fairly high growth and particularly very rapid growth since 2003 onwards, but it has not generated enough good quality jobs. It has not improved the conditions of nutrition, and it has been associated with dramatically increasing inequalities, which means that many of the citizens are not just deprived of the basic needs, but are actually worse off in relative terms. We really have to think about other indicators than purely GDP.
So where do you think India's economy is heading?
I believe that the Indian economy has a lot of potential, but that really depends on how the government plays this particular slowdown. If we use the slowdown to reorient the growth strategy towards a more wage-led, basic needs delivering growth, I believe there is huge potential. However, currently the government seems to be thinking that the only way to deal with the slowdown is to do everything possible to attract more foreign capital. I think that's a wrong strategy, and that will only lead to a future crisis.
India's annual GDP currently stands at 5.3%. What are your projections for growth in 2013 for India's economy?
Well, frankly, I believe that these GDP growth projections, as I mentioned earlier, are really barking up the wrong tree. So, whether I'm projecting 5% or 6%, it's irrelevant. I would much rather look at the projections for employment, the projections for nutrition, the projections for the provision of basic needs like electricity, sanitation, health, and so on.
Standard & Poor's and Fitch ratings agency warned last year that they may strip India of its investment-grade credit rating. Do you think this is likely?
It could well be likely, but let me be completely clear that Standard & Poor's and Fitches have not exactly covered themselves with glory in the recent past. They're well known to be behind the curve. They're well known to operate with very significant conflicts of interest. So I am not over-impressed by any of the ratings from these particular agencies.
And what are your main concerns for the Indian economy now?
My main concerns for the Indian economy are the fact that so far economic growth has not delivered better conditions for at least half of the population. They are living in significantly more fragile conditions. We are not generating enough productive employment for either skilled or unskilled workers. We are experiencing increasing inequality, and all of these are already coming home to roost in terms of significant social intentions.
Thanks for joining me, Jayati. That's all for now. Here at Dukascopy TV, we'll be keeping you up to date with the latest financial news and updates. For now, though, have a good weekend. Bye for now.